The GOAT welcome team. Is everyone happy? Everyone excited? Let's have a look. Woo! Rolex giveaway day. So we're going to start off with the preview to start with. I know you're all excited, but let's just kick off with that. And then after part one, we will do the draw. So how's everyone getting on this week? Because it was boring to start with, wasn't it? And then we've had all that CPI, inflation in the middle. Are you all winning this week? So it's a hell of a piece of kit that you're going to get hold of today. I wish I could get in this draw. Going to have to find a way of getting to the front of the queue. And remember, we're sponsored for this event by Rugs. Hopefully you can see that screen there. There's fantastic holders and winders. The watch itself is provided by AJ Chrono. It's a big shout out for both of those two. And let's just remember what we're up for. So there's the Rolex, and that's worth about £8,000. So it's a hell of a gift to win. You've got a 3-night trip to London, £1,000 in your pocket, a day in the Alpha offices, and then a night out with the Alpha team. And if you happen to be the runner-up, it'll be 2 nights out. Boom, boom. But all that to come. So what have we been seeing this week in the markets then? Boom, boom, boom. Trader Capone. If I win, I'll puke. I love that. So everyone's nervous out there then. And how's your trading been going along? Anybody got any questions on the trading? So we've had that CPI on Wednesday, which has just reversed everything in terms of the dollar. We'll have a look at that over the course of this session. And it's one of those strange things. Everyone's so focused on this that the actual ramifications of a small move were ridiculous. So 6 basis points of change was rounded up to a whole 0.01%. So it could easily have been a banging line print, and you wouldn't have had everything happening that we did on Wednesday. But having said that, there was still not a 2% fall in the US indices, and that's not happened for something like 285 days now. So things are still in the uptrend, and we'll have a look at a few charts as we go along, showing you that we came into the week talking about waves 3, 4s, and 5s, still looking for a finishing uptrend, and it looks very much like we put in 4s and they're holding on. So IMDMC, CPI was about to blow your account, and hopefully you came out the other end. Would we fly you to our country if we win? That'll be down to Alex, but it depends how far away you are. Johnny, what's my approach to the PPI report that drove the market higher? The fundamental theme maintained bearish with the current decreased probability of Fed cutting rates. Right, yeah, that is something that we were going to talk about. And the way of looking at CPI and PPI in combination is that literally one is the end user prices that you have to pay when you're in the shops, basically. So in terms of companies, that means that their profit margins are going up. If their input prices, which is PPI, are flat to going down or going up by less than what CPI is. So net, that is still what is there. So in terms of indices, and remember from our horse race, the winner was growth trumps everything. So they're not really that bothered about interest rates at the moment, as long as we've got growth in the economy. So you've got growth, you've got margins being put through, and inflation. Everyone's obsessed with small moves in this, and it is very much small at the margin. So it means everything can carry on going. Martin Curry, hopefully not the bloke who owns that dodgy firm who never seems to make me any money. Gold reaching 2,800 by the end of the year. Well, yeah, 3,000 is very much in line. I think the proper stopping point we get before we see proper wave 4 retracements is 2550. We'll look at that on the chart in a minute, but that is the minor wave 3, which is the one that's doing all the hard work. We're in the lower waves of that wave 3. And I don't think the fundamentals are going to change much at the moment. So remember, gold, if you listen to any of the media, they're hating this because they've all given up on it, just like the central banks did from the 70s. That's the main reason why it went into underperformance as an inflation hedge. In fact, Milton Friedman, who was the daddy of interest rate policy and the monetarists, said that it would go to zero because it was no longer had any point to it. But now you've got a complete reversal of that. The central banks have realized that the debasement of currencies, particularly a dollar, is going too far. You need to have physical assets. So this thing should bounce back just as hard, which is what's happening. And I've been chatting to a few people on my chat all about the long-term situation with China. And there's some very clever people out there that have got down on the Chinese data. Remember, China is the biggest producer of gold in the world, but they don't release any of it. They don't export any. So as well as their asset reserves, which are about 2,300 tons, America has 8,000 tons. It's believed that there's up to 32,000 tons of gold within China in various forms. So at some point they are going to revalue that with the yen and absolutely destroy the dollar. They're scared stiff of what happened to Russia. I keep saying it, and it's changed the ballpark for everybody. Ruben Derrico, as a free market libertarian, I'd love seeing gold at 5,000. Well, yeah, it should have its day. Lots of other metals have done well since. This is the gold payback time, isn't it? It's Saligan T, can everybody win, even if I don't live in the UK? Well, it's all down to the draw. Boom, boom, boom. Georgios Zikas, hello from Greece. I don't speak Greek, but hello. Boom, boom, boom. Where are we? Yeah, so remember, it's AJ Chrono up in Canary Wharf that's provided the watch today. Bag of sand for you there in your pocket. Not quite sure where the night out is yet. Alex will probably sort that out. It'll be somewhere crazy. And have you noticed the first results of Q1 were out earlier? Citigroup, which has an angle as well as Wells Fargo and JP Morgan. So Citigroup beat, but JP Morgan had a miss on its net interest income. So with the short rates where they are, banks should be having it off, but they've somehow managed to mess it up. Wells Fargo were in line, but both of them have said that their provisions for bad debts have gone down through the floor. So it's interesting. A lot of the Fed members that are looking for rate cuts are worried about the debt burden of the consumer and the retail side. But if the banks, who are the ones who've actually put the money up, are less worried, then that again might work against rate cuts in the short term. We'll have to see. But in terms of indices, it gives you another driver. If the banks start moving, that is what they call a value play, and we'll get a broadening out of the rally in equities as well as the tech stuff. So net it'll be good. The dollar, I think, we'll have a look at dollar, but I think it's time to change the outlook. I still think there's bearish potential, but we may be doing this double correction higher. Excuse me. Just a reminder there for the people who've come. That's what we're in the draw for today. 3-night trip to London, £1,000 spending money. The jewel in the crown there is the day in the Alpha offices. We all want to be there. A night out with the Alpha team, obviously. Who wouldn't want that? Fantastic peripherals to go with what is an absolutely top drawer watch. So this kind of stuff to support it, spin it, wind it up. Might even put it on for you. What else have we got? Will we be dropping, Armend says, will you guys be dropping a nice discount when you resume accepting US customers? I can't say for sure, but knowing what Alex is like, I'm pretty sure that's nailed on. Sean is something. You're spot on there, my friend. Night out with the Alpha Boys is the real prize. Boom, boom, boom. Dale Reeves, it's a bit naughty, but you never know. Unfortunately, Amar Mutezi, you bought a fund 2 days ago. You won't be part of this competition, but there will be other fantastic things coming up pretty soon. Ian Wessels, Planty, good afternoon. Is there a chance we get a significant pullback on gold? Well, there is at any point. Let's kind of have a look at the chart before we do the draw. Let's do gold, get that out of the way. Yeah, so on gold, we've put in another high. So what I was talking about before was, if you wind it back, we've got all this nesting going on. So I think we're in the red 3, so the real daddy boy, because within that, of the 5 waves up, which is the real thing that we're dealing with, we're in the bunching of a lot of third waves. A third of a third of a third of a third is what Elliott wave people really want to see for some explosive breakout. I think we can definitely describe we've got that. If we look at the relationship of the 1 to 2 and project upwards, to be a equal legs 1 equals 3 is about where we are right as of yesterday, 2400. But the third wave normally does a 1.618. That's what takes us to 2555. And that's where I think we'll start to see a proper retracement, because that will be the starting folding in of these black waves and the blue waves, and then further sub waves that we're playing out on a daily basis with. But I still think we've got another big impulse to come before this settles down. We've been waiting for it for a long time. Excuse me. In the short term, though, we've done enough to suggest that we could be about to have a retracement again. But we keep hitting these support blocks very much on the classic wave 4 levels of spot 236 and spot 382, our historical wave 4 pullbacks. But we couldn't rule out that we are still nesting. But I do think we are currently in the start of a third wave up. So I'd expect all the pullbacks to be quite shallow. But I'm looking at 2369, 2381 as potential bounce offs, purely because it's highly likely to be pushing on in the indices and the earnings season, which we've just started in the States. And I think the mood music is on. There's very little negativity out there in gold. I think yesterday the relationship between CPI and PPI, and we'll talk about the comments later, and you'll see them in the preview, but a lot of people were saying that the people that matter, that are making the decisions, are still looking at PCE, and PPI feeds into that. So that wasn't an irrational unwind of Wednesday's pullback. I think it was just symptomatic of everyone was just a little bit tired and fed up of that same mantra day in, day out about the rate cuts. They don't really matter for this year while conditions stay reasonable like they are. Nothing's deteriorated yet. Nothing's really fallen apart. What it is a problem for is the rest of the world. The relative is the problem. We don't need the dollar as high as it is. So you could see it in the ECB comments yesterday. They're a bit coy. They say they want to be independent, but equally, if the US is going to have the highest rates in the world, that's just going to attract inflows, keeps the dollar high, and puts everyone under pressure, because that means you have to buy. You're importing inflation all the time with a weaker exchange rate, so it makes it difficult for people to cut. So we really do need the US to start equalizing at some point. They don't care, and to be honest, both of the people involved in the election are both a little bit nationalistic in their policies. They're self-sufficient. They're not really that bothered about global trade at the moment. So we need to be aware of the fact that we might not get these rate cuts until after the election. I still think 2 of them are coming after straight after the election because the meeting is 2 days after the vote, and then you've got the December one. So we're really only dealing with one rate cut anyway, pre-election. Gold like my levers. Japanese yen. That's a good one, isn't it? Let's tell you what. We'll look at a Japanese yen chart and then we will do the draw. Woo, woo. So where are we? Here we go. So I talked about it to some people. I think I put it on the previews. Maybe talked about it on Monday. But this is a classic. If you're even looking at support and resistance, you had a classic barrier triangle, which all things being equal, you knew was going to break out. But you had chatter, there's intervention. If you drag this all the way back across to weekly view, you see they last intervened in 22 at 152, which is why we had that line in the sand. So we know that they've done it before. The ministry kept getting on about it. But we mentioned there's lots of option activity, people playing the 155. All you've had is rhetoric from the officials. They messed up when they did the rate hike. They should have backed it up with we're looking for more inflation and we'll go again. And all they talked about was keeping policy easy. I mean, they are looking at some of the data that's been out this week. There is repatriation of funds by the Japanese and they are investing locally. It's a good sign, but this is disaster time for them. But there's absolutely no point taking it on. This is a market-related thing. Until they were praying that CPI was good and that the rate cuts were coming early. The combination is not helpful. If anything, I think we are going to come and put the new line in the sand. Is going to become this 155 level. I think the option boys are pretty clever, but obviously it can oscillate. Classically, we'd love to see, if you're a bull, you'd love to see a retest of that breakout. That might happen with commentary from some talking heads or a little bit of weak US data, but the Japanese have got to do something. There is chatter that I think April 26th it is, when they got their next meeting, that they are going to change their inflation outlook to be more positive, to try and really ratchet it up. But, we've got to wait for that. Boom, boom, boom. Zamasu, don't be predictive, be reactive. Well, bit of both. I think you should be preparing for scenarios. Have alternate views is what you're really trying to get towards. Factor in the fundamentals. Have 2 or 3 options on your charts and go for your highest probability one. Risk management, psychology, blah, blah, blah. We'll go through it time and again. The more boring it is, the more money you're going to make. EU and GU have been going in a negative direction since March. Boom, boom, boom. Yeah, I mean, Ian Wessel's again, all he's hearing is bullish, and that is the problem. And when you're in an impulsive wave, I mean, we've all been waiting to try and get back in on pullbacks, and they're never there. It is very tricky. Boom, boom, boom. Right then, let's start thinking about the draw, shall we? Last reminder of what we're here for. The March giveaway, the chance to win a fantastic £8,000 Rolex. The chance to meet all the super alpha dudes in the office on a night out. £1,000 in your skyrocket until we gamble it away from you. You're here for 3 nights. You're going to get the watch stand, a winder, and a cleaner. You might even get a watch cleaner as well. This sort of stuff, absolutely brilliant. A watch from AJ Chrono in Canary Wharf. Check them out if you're ever in town. And now, the moment you've all been waiting for. And I have to make you aware that I've got absolutely nothing to do with this. I've got no idea who's in the draw, who's going to win. And the draw has taken place in London in the last hour. And this is going to be a recorded version of it. I'm waiting to see who wins. I've got absolutely no idea. Boom, boom, boom. Boom, boom, boom. Are we absolutely ready? There might be a small delay from when I click go, but get ready. Everyone, eyes down. Here comes the draw. Dum, 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 dum. Come on, the draw. Who is it? Come on. Dion Kenning from Amsterdam. Come on down. Wow, I want to see this guy going absolutely crazy. I want videos into the Discord. I want every meme and GIF you can find, my friend. Dion Kenning coming to London anytime soon. What a winner. Absolutely amazing. Top banana, as they say. Fantastic. Does anybody know him? Is he in? Is he actually watching? Dion Kenning, are you here? Boom, boom, boom. He must be the coolest man on the planet then if he's not watching. Go Hammy, go Hammy. There you go. Ian Wessels is also in Amsterdam. He's very willing to share it with you. I have got no idea. Is Hammy really Dion Kenning? I've got no idea whether that's true or not. It's going to be like we need to get a Spartacus meme going, don't we? It's the I'm Dion Kenning. Oh, I'm Dion Kenning. Shocking. Yeah, well, there's some. Alex, are you in here? Are we going to give the guy a time limit to get onto the live YouTube to be able to collect his prize? What do you mean you don't trust this process? We're the most honest prop firm there's ever been in the world, and I haven't got anything to do with it. It's been absolutely straight up done in a London studio. You've seen the spinner. Thank you all for joining that have to leave us, but hopefully the rest of you are going to stay here. Has anybody got any pertinent questions about what's been going on in the markets this week? Like I said, there would be a second spin, but the prize would be 2 nights out with the Alpha team. Nobody wants that. That's a shocker. Nice one, Hammy. I heard Dion Kenning got to prison for insider trading. Think we need a respin. Thank you, IMDMC. That's what we want to see. CBS Trader, why does PPE hold more weight than the CPI? Because the nature of the things that are in the CPI. So this one on the shelter, remember, is 33%. So I'm probably too close to the mic there. Of which 25 of that is down to the owner's equivalent rent, and that is a made-up number. So basically, they try and estimate what people would rent their houses for on the basis that the majority of people own them. And within that, they've got it at 50-50 when really it should be 80% young, small family homes. So they come up with this number, which doesn't move that often, and they only survey people in real time every 6 months. So you don't get to see what the real rental effect is versus anyone that's actually measuring it on a month-to-month basis. So the Fed decided that that's too unreliable. So they'd prefer to use the PCE. Now, more of the components of PPI actually directly feed PCE than CPI. So that's the real reason why you get reactions like you got this week, that PPI is more important, and that was slowing back under control. And it's really that, that's two months out of the first three where that PPI number is in control. We only had the January one that really blipped it up. Remember, if we did that meme about the hospital costs with Powell on crutches, well, that's calmed down now 2 months in a row. The only one that's really holding up is something that the Fed won't worry about too much, and that is the amount of commission that people are paying to their brokers. So in terms of alpha, with that we mean take lots more challenges, please. Commissions that are being paid for performance. The higher the markets go, the higher that number gets. So it's a kind of self-fulfilling number. Isn't really inflationary as such, and it is quite helpful in times of if wages start tightening. So is everyone clear on that? It is something that we'll regularly look at. Not everybody goes into the full detail like we do on either of those numbers. And we were right. The rental number did actually come in line to small down again. It was just there were things around the edge on CPI. But again, and people were starting to talk about it properly yesterday, is that within CPI and even some parts of PPI, a lot of it is down to the motor side, motor insurance, which won't last forever. That won't keep going up permanently. Once that cycle gets too rampant, then new entrants come in and start bringing the price down. So that'll correct itself. And again, a lot of those components are estimates within estimates. And motor repair costs, you can't imagine that's going to stay high for that much longer. The supply side of things, the supply chain is backing up. So then the things that you should really be concerned about that aren't necessarily in core is the fact that food prices and energy prices are high. So the Fed look at measures that exclude that, but they'll have to consider it on the basis that, is actually going to bring people's cost of living up. But equally, putting rates up isn't going to make any difference. It's not actually going to help either. If you're putting rates up, isn't really you can do anything to bring down the price of oil. So has anyone got any more questions? Johnny at CBS Trader, didn't price sold off again in pre-market? What's that gold we're talking about? Kaizen, where can I learn more about macroeconomics? Well, stick with us, pal. We're going to be doing this twice a week. We're going to start putting out a series of videos on it. We're going to have seminars. No one really puts together stuff like we're going to do it. So with that real market overlay, it'll be too theoretical otherwise. So yeah, stay with us. We're moving ahead quickly with that. I like that. Let's leave Celine Dion to enjoy his holiday. I like that. Jan Visital. Yeah, see how many. Zamatsu. So PPI and CPI. Well, yeah, I'll say that again. So one is a measure of consumer prices. So it is effectively what the price of goods is at the end of the chain. And then PPI is producer prices. They're basically the input. So it's the stuff that's bought to make the goods. So eventually they feed through the chain. If they're too high, they have to get passed on or they have to get absorbed by the company and they get lower margin. So it's, it's a moot point as to how they feed through relative to what people are willing to pay. And if people are getting increases in wages, they tend to be happier paying and adjust to paying higher inflation rates. But it is a nice mix. The longer you can keep PPI lower, then that benefits everybody. And it certainly benefits the PCE, the personal consumption expenditure bit, which is what the Fed looks at. You see that produced within the GDP report, and it's done on a monthly basis. and measured from the retail side of things. So we will teach you about how to look at the economy and how to look at all these data points, not only in isolation, but how they all link together. That'll be coming over the next 6 to 8 weeks, and we'll talk about it on a daily basis. Please ask questions, and then we'll have something that you can all watch. Winner, winner. Is that Alex? Winner, winner, chicken dinner. Dion Kenink. Can somebody find Dion Kenink? So yes, Israel is on high attack alert, and that is a geopolitical risk going into the weekend. If they're going to do it, they're going to do it over the weekend, aren't they, for maximum impact? That keeps the geopolitical bid on oil and gold. The equity markets are looking after it, aren't they? They're sort of adjusted to it. We really are now looking at US earnings to drive us forward, and it's not you guys going into earnings. I'll put it in the preview, but the expectation is still quite low for Q1. Q1 isn't necessarily the knock it out of the park one, but 3.8% is the expectation for Q1 on as a whole for the S&P. The Mag 7, even including the Tesla debacle, are looking at 38% growth for Q1. And if that comes through in a beat, then we will get driven ever higher. So while we're talking about that, let's have a look at one or two of the indices. We came into the week around this point saying on the DAX, which is the powerhouse, and the data, is that equal waves pullback, 3-wave pullback to where the 4 is at 81,125. Was that going to be the end, or would it put in a connector and do double the consolidation and test the bottom of the upward trading range, upward sloping trading range? It's the latter. We've had that nervousness over the midweek and it's taken us down. It's been an overthrow and it has sort of gone back in and out again. It's kind of an important time for the DAX index. We'd like to see that come back in and resume the upside. I think the problem was one or two people were hoping that there'd be a definitive rate cut mentioned by the ECB, and they've waffled around the edges of it. So we need to see that sort itself out, but it does feel like we've either put in the 5 waves here, or we've got another little leg down here into 17,800s before we go again. But this has been the powerhouse. I'd be amazed if this were to roll over now. It hasn't quite completed the full set of waves. DXY, I thought it'd be useful. Oh, by the way, did you get to see the German? I don't know if I press go on the DAX chart there. Did you see that? Is Dion in the house yet? Have we had a video? Have we had any communication? Okay, like I said, on the dollar, the long-term position was that we topped out there in the absolute bottoms of the equity crash in October 22. The yield started pushing back, and since then we were doing a consolidation ABC 4 waves, of which we thought we'd put in an A. There's been a lot of conjecture throughout the whole sell-off in the middle of last year as to whether that was an expanded flat overthrow or whether we'd actually have to adjust and say that the A low came in July. After which we put in a B wave, and then we should be, which is what we thought, the sell-off 1, 2, 3, 4, 5 of the dollar down to sub 100. But at the moment, we forever, I mean, this is a monthly basis, but we do keep getting this rally that thwarts all the down thrusts. We've talked about there being some seasonality in April, 66% of the time, but that does mean 33% of the time if the ducks are looking the other way, we can have a different setup. And at the moment, while the yields are high and the inflows are high and geopolitics are high, it's difficult. There's only seemingly the commodity push ignoring the normal dollar inversion. So what does that mean? That means that we could possibly be going up for, we'll need to do an adjustment, but we look like we could be doing an equal legs within this consolidation, and that takes us up to what looks like 108.5. Still valid as part of the overall. Remember, if you go back up for the bigger time frames, you get to see the overall trend, and that's sometimes where we have to rewind to. So it could still be heading for this ultimate unwind on the dollar. It's just that it's going to be delayed until we get further into the year by the look of it. But you never know. Only needs one piece of data to change. That brings us back, and it's something that we'll have to talk about. It's a complicated thing. It's the dollar smile. Mentioned it a few weeks ago, and that is when people start to get to be believing that the only thing in town to buy is the dollar, then it no longer negatively correlates with risk instruments. That has happened a number of times. Stephen Jen of, I think it was Morgan Stanley, was the guy that came up with that theory way back in the 2000s, the 90s and the 2000s. It's a good chance that that might reapply itself to the markets. So it's not necessarily a problem for commodities. As we can see, commodities, why have they moved? That is because inflows are going there. They've got breakout from long-term trends. And demand is up, even though Germany's been bobbing along on a recession that's bouncing off it. Most of the manufacturing indices around the world are all jumping. Take out construction. This morning's UK data was all very upbeat on industrials and manufacturing. And in fact, the construction side, that's quite a leading indicator. That will help in the argument for getting the Bank of England back closer to being in line with everyone else on the rate cuts, I think. So yeah, here just to demonstrate. The equal legs that we've been looking at short term is 106, spot 717 from the original setup. So there's still a little bit of room to maneuver without invalidating what we've been playing. But beyond that, I think we have to recalibrate, and we're back more into this. I haven't changed this like the monthly chart, but we're going to be looking around this overthrow to 108, I think, if we're not careful. Boom, boom, boom. PX1, Dungo, Germany. The one that slightly concerns me on the index side is the Dow, because the Dow has come back into its upward trading channel and not managed to escape yet. It has gone into the range which I'd set up for the 3-4 pullback. As you can see, without moving anything on the chart, we've been playing out on that, but we're very much getting towards the extremes. If we go beyond one spot 618 for this move, where we were looking for equal legs, which it's already gone past, we might have to consider that we are in a bit of a different pattern for the Dow. Obviously, the Dow has a lot different makeup to everybody else. Oh, he's here. Yo, he's here. Dion Kenning is in the chat. Congratulations, old boy. That's absolutely fantastic. You're going to have to put up with a lot of the Alpha team when you come to London, but wow, what an absolutely fantastic prize to win. So we want to see videos of you going absolutely crazy. We want you all over Discord. We want you making yourself a meme that shoots anybody that criticizes Alpha Capital, because is there any better prize than this? Is there any better prop firm in the market? I don't think so. I know there isn't. It's been an absolutely brilliant thing to be involved in. And I can't wait for the next prize. How are we going to beat that? Yeah, I want you going viral YouTube, my friend. Where were you? Why weren't you on the live chat? We're now going to get abusive. Nasdaq, meanwhile, similar vein, but is obviously the daddy boy and has all the growth trumps everything, dollar support, but also they're fastest growing, and everything keeps falling into line. Again, we had the double pullback sat against the lower trend line for the 4 and expecting all these 4s to be in a similar line as well. So you can grind up, you get the 3s, the 3, 4, 3, 4, 3, 4. You may at some point get impetus that breaks one of the invalidations, and that could lead to a proper breakout if anything changes. But at the moment, this is going to look like volatility. It's why the media won't let go, and they'll always be throwing the bears at you when it's a down day and finding the bull guys on an up day, and it's difficult to see what's really going on if you're not doing your own charts. But I still think we're stuck in this grinding. And there is a potential to put in this 20,000 print. We might have to reevaluate that if anything goes wrong with this earnings season. But I've got a feeling that we're going to beat on the earnings season and finally put in a proper splurge to finish this whole proper 5-wave move up, to put in a cycle wave 1. That's when you get a proper potential for a proper pullback. You didn't expect to have any chance. Well, you've got to be in it to win it, and you certainly were, and you certainly have. Boom, boom, boom. Dion Pratt is Nederland. Alles good, mate. Fantastic. We all love a bit of Holland. Boom, boom, boom. So again, the euro and the dollar are in opposite movement, obviously, and so far the dollar's been breaking out a little bit more impulsively than the euro's been coming off until the last couple of sessions, really. And with the US looking like pushback on rates or fewer rates, and the EU definitely looking like they need more and having to go early, it's going to be under pressure. And I said last week, and we got in what was a breakout. This all needs redrawing, really. I think now is an A, B, putting in a C wave, and it might even be something deeper than that, subject to what the dollar does. And we're expecting the dollar to maybe go a lot higher. Then this may actually be a 5-wave down rather than a 3-wave consolidation. But as it is at the moment, very much like we've had 5 swings in there. There may well be a short-term bounce coming, as there may be a dollar sell-off. But we've got to get through the weekend, and we've got to get through the geopolitics. So that might leave us in place for a fundamental-driven bounce on Monday. But it certainly looks like it's counter trend for the minute. But we'll have to keep an eye on that. Boom, boom, boom. So in terms of charts, that's most of what I'd wanted to cover, unless anybody else has got something to look at that they want to show. There's a number of good charts going to be in the pack this week. Number of cuts pushed back for the Fed to below 2. Bank of England almost only 2, and the ECB down to 3. I think there's still scope for the Bank of England to go back to 3 and ECB 4. The Fed possibly it's still probably split between 2 and 3. I do think that they want to get there. Some of the rhetoric from the people who they send out to do the batting, from the talking heads, Williams particularly, he's changed his language, but in a clever way. Sees continued bumps, as we've seen, but still expects an opportunity to cut later in the year. No clear need required in the near term. That's been everybody saying that this week. But he referenced it all back to the PCE again, try and get everyone away from looking at CPI at all. We've talked about it. PPI feeds that. Thinks unemployment will peak at 4% and come back. He's changed the whole narrative with the last bit of his comments, saying that the surprise isn't the fact that we're having bumps in the road now, because he expected that. That what they didn't expect was things to have improved so quickly from last year. So that that's just preparing to give themselves excuses for saying how relative year-on-year basis there's still room for them to do what they want to do. I don't know if it's just me as well, but it seems to be most of the negative put rates up chatters at the Bank of England. There's Miss Green and Mrs. Mann. Now we've got Collins and Bowman being the two ladies in the States who are pushing for and actually talking about, is there a need for an actual rate hike? So I don't know if the ladies in the alpha community want to tell me why the female side of things is seeing everything as ultra negative and the men are being more positive. But I don't know. Maybe that's just me reading too much between the lines, but I'd be interested in any feedback. We've mentioned the start of the season today, the banks. Has been anything else clever said out there? No, like I said, Japan, they're still talking. Ueda went out of his way to say anything that sounded hawkish. I think every dove is being rounded up in Japan and hidden away in some massive pen. Boom, boom, boom. Yeah, so I think that really covers most of what's happened that was important this week. I'll just check what happened in Michigan while we've been chatting. Oh, that's not out, is it? Yeah, the next bit of data that might have a moving on the dial. 3 o'clock, Michigan 1 and 5 year inflation expectations and their sentiment surveys. They are followed, but it shouldn't be a big dial changer. Can you tell me why, Johnny? Okay, Johnny, we just thought it'd be good fun to combine doing a draw with the whole community. Boom, boom, boom. So these sessions will take place on Mondays and Fridays around this sort of time. Sometimes we might do it through non-farm payrolls. We might do it beyond, see what works better. Remember, Johnny, what Alex said on the chat this morning. Super positive, super positive. No dissing. Dissing gets banning. So it's just popped up on TradingView. Boston's Fed Collins has repeated that it will be appropriate to start easing later this year. It's going to take longer than thought. I mean, this is all repeating everything that they're saying day after day at the moment. So any more questions, or we'll sign off, and there'll be the preview PDF out on Monday and a video covering that and anything else that I find over the weekend. Then we'll do an update and preview the week for you at 1:30 on Monday. It should be the same channel, but I'll send it out again. You can keep asking Zamatsu as many times as you want. There won't be a respin. I can't say what. I'll respin it again, see if it makes any difference. It'll be the same result, I'm pretty sure. It's about the most guaranteed chart of the week. Boom, boom, boom. So going once, going twice. Any final questions? If not, it's been great chatting. I hope you enjoyed it in the whole. I thought it was quite good fun. I think Dion's enjoyed it now we've found him. Good luck with the rest of your trading. Keep it nice and tight going into the weekend, and we'll speak on Monday. Take care. See you soon. Okay, Emmy and Wisdom. Sorry, I've been on the top chat and the live chat wasn't coming through. So let's just see if there's anything. Is there anything else? Is the dollar index always opposite to gold? No, that's what I was saying earlier. The can you still hear me? Yeah, the dollar and gold aren't always opposite, but in terms of purchasing power, they tend to be, because if the dollar is weaker, then it takes less to buy it with, so the demand goes up if you're in a foreign currency. So you do get that kicker when the dollar is weak for most commodities. But like I said, you can have periods where the dominant factor is something else, which is what we've got at the moment. So Aron Capital Investments, we didn't get the winner. What are we talking about here? So the winner was Dion Kenink. You can probably see it further up the chat. Right, cool. The real Dion Kenink, who I believe is there, you will be contacted. Yes, Johnny, we could have done what you said, but we wanted to do it in this way, just to involve everybody, have a moment out of it. So I hope most people enjoyed it. It was always going to have the live show anyway, so we just tagged it on. Anyway, take care, everyone, and we'll see you on Monday. Cheers.